No credit score FHA loan. In this video, you're going to learn about a loan that FHA offers where you don't have to have a credit score, and that allows for you to purchase a home. It can be new construction, it can be pre-existing, but you can purchase a home without having an actual credit score. Stay to the end of this video to learn how you start and finish to get to that point to where you can purchase a home with no credit score, no BS. So FHA is a government-backed program that offers, typically when you have a 580 or better credit score, a 3.5% down payment requirement. Typically, when you go to a lender, they typically say, hey, I can't, if you don't have a credit score, you cannot qualify for a home. This program, a lot of people don't know about. It's not often talked about. So we'll dig into it in this video. So let's discuss what FHA is. FHA is a government-backed program which offers 3.5% down payment requirement, typically on scores of 580 or better. In this particular case, you don't have an actual credit score, so your down payment requirement still is 3.5%. The 3.5% down payment is actually what it is. So example, if you've been approved for a $200,000 loan, you bring a down payment of $7,000. We bring the additional funds of $193,000. On top of that, you also have something called closing costs. Closing costs is different from the actual down payment. And for the purposes of this conversation, closing costs is going to be about $10,000. So with your down payment being $7,000 and your closing costs being $10,000, your required amount of money that you need to bring, which is called cash to close, is $17,000. When you go to a lender and they pull your credit, if you come to me and you don't have an actual credit score and it says not scorable or no scores available, then we know you don't have an actual credit score. Sometimes you can have a Vantage credit score but not have a FICO credit score. FICO is the Fair Isaac credit score, which lenders and financial professionals utilize to determine a borrower's credit worthiness. Vantage scores typically come from your credit card companies. It's also from the Experian, TransUnion, and Equifax apps that you get that show a credit score. Those aren't FICO either. So when you come and you don't have an actual credit score, that all hope is not lost. You still have the ability to qualify. The good part about not having anything on your credit and not having any debt on your credit is meaning you don't have a debt to income ratio at that point. So the majority of your debt to income ratio is actually going to be when you purchase a home. So it'd be a total housing ratio. So we would still get the minimum required documents, 30 days of pay stubs, 2 months of bank statements, all pages. If you're pulling from a 401k or some type of retirement fund, we're going to need the most recent statement from that, all pages, as well as your most recent 2 years of W-2s, whether it's 2023 and 2022, or if you're watching 2025, we need 2024 and 2023. We need your most recent 2 years of W-2s as well from all jobs. So if you work 4 jobs in those last 2 years, we need the W-2s from all 4 positions, all 4 jobs. We also need a copy of an unexpired driver's license, just the front. We don't necessarily need the back. If you are a permanent resident, we need a copy of the front and the back of your permanent residency card. We also need a copy of your social security card. And if you don't provide your social security card or don't have your social security card, we can also take your passport in place of the social security card, but we will at some point need a copy of your social security card. Next, once we have all of those documents, we'll start to calculate some income. We will actually take a look at the income that you can qualify with, and we'll take a look at your work history, and we'll do the normal process of getting you pre-approved in terms of establishing what income we can use, making sure there actually aren't any debts, like if you make sure you don't pay child support if you do, or alimony, or any kind of debts outside of that. That's how we'll initially set up the file. The next thing is we will have a discussion on, can we establish that you have some form of credit? Typically, you hear people refer to these items as trade line. So what a trade line is something, it's credit that's been extended that may not be on your actual credit report, that shows that you have a 12-month history of not being late, not being less preference, not being 30 days late on your bill. The first item that we're going to try to establish is a 12-month rental history. Now, the reason why we look for the rental history, because at this point, it is the highest amount of money that you're going to pay that's closest to what your new mortgage could potentially be. Now, also, it shows that, hey, this borrower has the ability to make, let's say your rent payments of $1,500. They've made $1,500 rental payments on time for the last 12 months. Would say, hey, they're a great candidate to be a current homeowner. That's one established line of credit. We're going to try to establish 3 trade lines of credit to show that you pay at least 3 things on time, and over the last 12 months, you have not been late on any of those things, that you have not been late on any of those bills over the last 12 months. So some other things that we look at is cell phone bills. We can get a 12-month history from your cell phone company showing that you have not been late on your cell phone bill, 30 days late on your cell phone bill. We can use utilities such as water, sewer, trash, gas, or something like that. We also can get a 12-month history from your auto. If you own a car and you pay car insurance and it's in your name, that you have a 12-month history of on-time payments with paying your auto insurance on time consistently. Now, from that, we're going to establish your trade lines. From those items, we can establish at least 3 items of trade lines. They don't necessarily have to be all of those items that I just listed, but we need to have at least 3 of them. I've also been able to get someone pre-approved with having a trade line using a Netflix bill. Anything that you pay over the course of 12 months, and we can get a history for it. We can utilize that to establish, hey, this person has 12 on-time payments in the last 12 months for us to assess the loan. Now, the other thing is something called a manual underwrite. What a manual underwrite is that it's underwritten manually by an underwriter. It has not been approved. When you hear people say AUS or DU, a desktop approval, it's not a desktop approval. But one of the steps in a manual underwrite meeting FHA guidelines is to establish a 12-month rental history. So we kill 2 birds with 1 stone by using the rental history for the manual underwrite, as well as establishing as a trade line. Now, once we have established those 3 trade lines, then we can begin to enter numbers in. Now, with a manual underwrite as well as a no credit score loan, there's something called debt to income ratio. While you don't have the ability to maximize your debt to income ratio with FHA, which is 56.99, you can go to a back end of 50%. Let's say, for instance, you make $4,000 a month. Your front end ratio, which is your housing ratio, cannot exceed 40%, which means that the most your actual mortgage payment could be is $1,600 a month to stay within the guidelines of a manual underwrite. So in the manual underwrite, here's a few guidelines or rules that you have to meet the criteria. First rule is obviously no actual credit score. Second rule, need to be able to establish 3 trade lines with your rental history being 1. And in the last 12 months on those 3 trade lines, you don't have any 30-day late payment. The other, you have to have at least 1 month's reserve or something called compensating factors. Compensating factors are things, okay, if this person doesn't have this, they do have that. Get with your lender or get with me and we can go over different compensating factors. For the purpose of this video, I don't want to confuse you, but I do want to motivate you that if you don't have an actual credit score, you don't have to go out and establish one. We just need to be able to bring together 3 trade lines to show, hey, this person does pay bills, but they have not established any credit on their actual credit report. With that being said, if you are looking to become a homeowner and you do not have an established credit report, do not go out and establish an actual credit report. Even with no credit score, some down payment assistance programs will allow for you to qualify for their program without a score, as long as you stay within the underwriting guidelines that they have. If you're interested in learning more about this program, my link will be below for you to schedule a call with me. I'm Kevin Jefferson, the People's Lender. Have a great day.